Good evening. The Indian stock market indices had a smart session today, showing some resilience in the backdrop of weak global equities. Overnight losses in the US and Asian markets dragged the sentiment down at open. However, after hitting an intraday low of 5,332, the Nifty index was on a constant uptrend. Market sentiment got a fillip after the Germany's constitutional court said that it would not postpone its ruling on the legality of the Eurozone's bailout fund, despite a last-minute legal challenge. The smart upswing was led by gains in realty, IT, power, telecom, banking and consumer durables. The mid-cap and the small-cap indices extended rally, with both the gaining 0.3% and 0.6% respectively. The undercurrent was cautious ahead of a couple of important global events and two key domestic economic reports later this week. The dollar declined against the major currency rivals today before a two-day Federal Open Market Committee meet tomorrow. Speculation has been rife that the Federal Reserve will announce a third round of asset purchases known as QE3. On the domestic front, markets will react to the latest industrial production and WPI inflation numbers. The BSE Sensex was up by 86 points to close at 17,852 and the NSE Nifty was up by 26 points to close at 5,390. Siemens, IDFC, BPCL, HDFC, Kotak Bank, Bank of Baroda, NTPC, BHEL, TCS and Grasim were among the notable gainers on the Sensex and Nifty today. Sisagova, Sterlite, Jindal Steel, Hero MotoCorp, Power Grid, Tata Steel, SAIL and DLF were the top losers in the Sensex and Nifty. The India VIX on the NSE ended higher by 0.7% to close at 15.38. The metal space continued to be under pressure after the Goa government suspended all iron ore mining operations in the state. Two former chief ministers of Goa have been indicated in the Shah Commission report on illegal iron mining. Shares of public sector oil marketing companies were in the spotlight due to media reports that the cabinet meeting later this evening could take a call on the sensitive issue of fuel price hike. However, just before the closing bell, media reports said that the CCPA meeting on fuel price revision had been cancelled. News of an impending increase in regulated fuels such as diesel and LPG has been doing the rounds for quite some time now. But the government has dragged its feet over the issue for far too long due to stiff political resistance. Thank you. Wish you have a great evening ahead.